Hey yo, what's good? It's your boy Dre La Soul here with some more crypto news and crypto wisdom for your head top. So today we take it back to the V. So I got some feedback from some of the audience, from some of my subscribers, that they actually like the car conversations, right? It feels more authentic, it feels like they're having a conversation with me. So we're taking it back to the V. And today we're going to talk about Ethereum because, Ethereum's been on my mind. And the reason being is that, people had a lot of expectations for Ethereum, thinking that Ethereum was going to hit its new all-time high, thinking that it would cross 4,000 and go upwards of maybe even 5, 6, 7, 8,000. And I still think that's in the cards, but it's just all timing, bad timing, right? The reason why people were expecting that is because of the money flow and the cycle of money flow in the crypto market. So the way the money moves around in the crypto market, right? So the way the money moves is majority of the on-ramps to crypto. And when I say on-ramps, these are the exchanges or platforms that give you access to purchase cryptocurrency. Majority of these on-ramps start with Bitcoin because Bitcoin is the granddaddy, the godfather, the leader, whatever you want to call it. Bitcoin started this whole thing. We wouldn't be here if it wasn't for Bitcoin, right? So many of the on-ramps start with Bitcoin. 1, 2, Bitcoin has that household name. It already has that first mover advantage, number 3, and it is actually now being realized as digital gold. It's not just your crypto enthusiasts and like your conspiracy theorists saying that this is the best thing since sliced bread. It is now institutions, analysts, investors, billionaires, millionaires, all saying that this is digital gold. It's probably even better than gold because of the fact that there's no weight to it. You don't have to carry it around. That is the downfall with gold. At some point you gotta have gold certificates because ain't nobody walking around with all that gold, right? And when Mansa Musa was walking around with all that gold and he was giving gold out, he messed up the whole entire economy, which is a crazy story as well. But not to go off on a tangent, the way the money flows in crypto, the money cycle. So money goes into Bitcoin because that's the first available option as far as the on-ramps are concerned, right? Then once that money goes into Bitcoin and people get their profits or they take their profits out, that money then goes into the next biggest cryptocurrency by market cap. So Bitcoin has the biggest market cap, trillions of dollars. The next market cap, which is billions of dollars, is Ethereum. So money then flows into Ethereum. Then when money flows into Ethereum, people take their profits out of Ethereum and then they put it into the next big coin, which could be your Binance, it could be Cardano, it could be Solana at this given moment, right? It could be any one of those. And then once money goes into those platforms and people take their profits, then they put it into smaller market cap, all the way until you get to the micro cap coins, which are the most riskiest coins, what I like to call the spicy coins, because you can get burnt and you could lose all your money. But if you're like me, you like spicy, right? So it's kind of like, I know I could possibly get hurt, but I don't know. I'm gonna take the risk anyway. I don't really care. So that's what it is, right? So that's the way the money flows in the market. So Bitcoin went to 108,000 a couple of months ago, and people were anticipating Ethereum to then mirror its activity and not necessarily go to the same price, but mirror its activity as far as the price going upward and then hit its all-time highs or new all-time highs. And then in turn, that would cause an altcoin season. And the altcoin season is when the majority of the altcoins or alternative coins, which are all the other cryptocurrencies that aren't Bitcoin, once they are at a majority standpoint outperforming Bitcoin's price action for a certain given time. And that's when a lot of people tend to make their money or necessarily not make it, possibly lose it. That's around the time where a lot of things happen that could be very beneficial for your portfolio, or blockfolio as I like to call it. And it could be detrimental if you don't operate the right way during that time period. Because the thing is, people like to only jump in when the markets are moving upward, when there's a lot of hype. But if you get in too late, then that hype is going to end up burning you, and you're going to end up losing your funds. Or you might take advantage of the hype and be in the cycle prior to the hype, but then not actually take those profits. And then you got to watch your money dwindle all the way back down to where you started, or even below that. So, again, people were anticipating that Ethereum was going to explode and reach all new all-time highs, which would then give us an altcoin season. But that didn't happen, and that was really due to timing. Trump got in office. Although he's supporting cryptocurrency, although he's signing off on bills that is promoting cryptocurrency, although there's other state governments that are supporting cryptocurrency, the biggest institutions in the world are buying cryptocurrency. It was bad timing because of tariffs, people thinking that China is committing all these conspiracy actions against us as far as like AI is concerned. And if you didn't know, now you know that we're in a technological war, right? This is like the Cold War when they were racing to space. This new Cold War is about artificial intelligence, AI. It's about blockchain. It's about fintech. It's about just technology and the disruptiveness of the technology that is the new frontier. The world is about to change so fast and people aren't even going to realize it, right? But going back to the turmoil, we got some temporary turmoil because Trump's idea was to detox the market, right? And fix everything that was messed up with the last administration. So because of that, stocks are falling, crypto is falling, all of that. So it's bad timing for Ethereum. So people are like, yo, what's happening with Ethereum? Is Ethereum even lit anymore? People are upset because Ethereum is slow. It's a slow blockchain. People are upset because Ethereum costs a lot of money to do transactions. To build on Ethereum, it's expensive, right? Now, the reason why I believe in Ethereum, the reason why Ethereum is always going to have a place is because of its first mover advantage. Ethereum is the granddaddy of smart contracts. Smart contracts are digital contracts that execute without two parties needing to be there, needing to do anything. It's all based on the code. So you set a code for this smart contract to carry out a task, and it will carry it out automatically without the intermediary of a middleman, right? Now, because of smart contracts, it allowed developers to advance on blockchain. And when I say advance, now we have the ability to create apps, which are decentralized applications, aka dApps. Ethereum is the reason why we have the amount of cryptocurrencies we have in the market today. Now, in the beginning, it was only Bitcoin, and Bitcoin had its many forks. And when I say forks, meaning the code, which is the technology behind Bitcoin, is open source. It's kind of like Wikipedia. It's open source. So anyone can take the white paper, take the instructions, and recreate their own Bitcoin. Doesn't mean it's going to be as big as Bitcoin and be as powerful and be as useful as Bitcoin and be as sovereign, but they can do that. So there's forks of Bitcoin. You got Bitcoin Cash, you got Bitcoin Gold, you got Bitcoin Diamond, you have Litecoin, which is, they say, the silver to Bitcoin's gold. You have Dogecoin. Dogecoin is actually a fork of Bitcoin as well. It has the same mechanism as far as the blockchain is concerned and the technology as Bitcoin. But it's a meme coin. It was created as a joke to make fun of Bitcoin, right? So you had all those coins. But once Ethereum hit the market, that's when the real competition started. That's when the real creation of coins and magic internet money started, right? And the reason being is because, one, Ethereum introduced ICOs, which is initial coin offering. So that's like an IPO. When a stock goes onto the stock market for the first time and becomes public, that's called an IPO. So when these cryptocurrency projects jump onto the blockchain and they're on chain and are now released to the market and become chain worthy, aka public, that's an ICO. So Ethereum created, or the Ethereum developers created, a token standard, which is a standard for them to make tokens. So you have to follow this standard to enable yourself to make a token, which is called ERC20. So all these tokens that were created on Ethereum were ERC20s, like Polygon, Avalanche, Arbitrum, and Optimism, Engine. There's so many different coins that I can name that were ERC20 tokens, which were created as ICOs, which are created on the Ethereum blockchain. So again, this is open source, meaning that anybody can do it. Anyone has the ability to create. So that caused the creation of more coins. People are now making coins like the new Ethereum or a better Ethereum, or they're making decentralized applications, whether it's for healthcare, whether it's for technology, whether it's for AI, whether it's for engineering and landscaping, whatever it is, right? You can now create a token. Gaming and meme coins were probably the most popular and the most attractive at a given time, but you can literally make anything, right? Now, in addition to that, Ethereum created the competition in the space. So that's another reason why we have tons and tons of coins in the crypto space, because now you had this idea in 2018, 2019, maybe even 2017, there were coins coming out creating their own blockchain called the Ethereum killers. So EOS was probably one of the first Ethereum killers. Cardano was considered an Ethereum killer. One of the most popular Ethereum killers is Solana. So the reason why they say it's an Ethereum killer is because more transactions per second. So it's all about transactions, right? It's a transactional layer. The transfer of money, the transfer of energy, the transfer of wealth and services happens on these blockchains, right? Bitcoin was the transfer of money and funds peer-to-peer. Ethereum introduced smart contracts. So now we have the digitization or the computerization of money, right? So it's like digital money, computerized money, programmable money, right? People might say, oh, money is digital already. Yeah, it's digital because it's on your phone, and it's digital because there's these fintech platforms, but it's still antiquated in the essence of it being fiat, right? So this new digital money, programmable money, was created on Ethereum due to smart contracts. And then decentralized applications was created on Ethereum. ERC20 tokens was created on Ethereum. So all this stuff was created on Ethereum, allowing for thousands and thousands of coins to be made, right? Now you have the Ethereum killers that have the same mechanism as Ethereum in the sense where it's a blockchain, a smart contract blockchain. So think of a smart contract blockchain as like a platform for people to develop, like JavaScript, right? So now people are able to make applications and even more tokens on these Ethereum killers, the competition to Ethereum. So now you got even more coins. So it's spawning into this cycle of just like the creation of coins, people trying to compete with Ethereum, people trying to be better than Ethereum. Ethereum is still a developer platform, so people are still building on Ethereum. People realize that Solana, Cardano, Avalanche, Cosmos, it's cheaper to build and maybe even easier to build on Ethereum, on these other platforms than Ethereum. So now you got even more coins and more coins being created, right? But all of this started because of Ethereum, right? Another reason why I think Ethereum is here to stay is the fact that institutions are leveraging Ethereum. Banking is leveraging Ethereum. You have something called DeFi on Ethereum, which is decentralized finance, right? So finance products like savings, like trading, are on a decentralized platform where there's no middleman. So like Robinhood, E-Trade, all that it's not decentralized, it's TradFi, traditional finance, because there's one entity that controls it, whereas DeFi is decentralized, so there's not one entity that's controlling it, right? So the future of finance is tokenization, and it's not just me saying this. Larry Fink, who is the CEO of BlackRock, said that the future is tokenization, meaning everything is going to be tokenized, and we call that real world assets. So real world assets are going to be all over Ethereum's blockchain, meaning that trillions upon trillions upon trillions, maybe even zillions, I don't know, of dollars is going to be on the Ethereum blockchain due to DeFi, due to TradFi converting into DeFi, due to TradFi creating real world assets, which is the tokenization of stocks, the tokenization of real estate investments, the tokenization of art, anything that exists in the real world, it having a tokenized counterpart. So remember how I said ERC20 standard was the standard to create a token. Then you have the NFT standard, which is ERC 721, if I'm not mistaken, that allows you to create NFTs, which are unique items. Then you got RWA, the tokenization of that. So all this magic internet money that people are saying is magic is happening on Ethereum. But the reason why something has value is because people give it value. The reason why we call it currency, because there's some energy behind it. It's like current, like electricity, right? And there's energy in this space. People are moving around, people are trading, investing, and all that stuff. So that's why, in my opinion, we can classify it as currency. It isn't traditional fiat currency, but it's currency within its own right. Because even attention is currency, even data is currency, right? But it's not fiat, but it's still currency, because it's the exchange of energy, the flow and the movement of energy from one place to another, from one hand to another hand, right? So in addition to that, Ethereum can be looked at as a trifecta asset, right? The reason why is because you can invest in Ethereum, and then on top of being able to invest in Ethereum, it's deflationary because it has a burn mechanism where every transaction that happens, there's a little bit of Ethereum that's being burnt, taking it out of circulation completely. Whereas the difference with Bitcoin is Bitcoin has a finite supply. There's only going to be 21 million Bitcoin ever created. So the basic laws of supply and demand, that is the reason why when more people demand Bitcoin, the price is going to go up, because it's limited, it's scarce. It's like, it's a rarity. Ethereum is creating that scarcity with its mechanism for deflation. Now, on top of that, you can stake the Ethereum, meaning that you can lock your Ethereum up and earn interest. So now it acts as if it's like a dividend or a high yield savings account or a CD where it's paying you back in interest or in Ethereum. So the biggest difference between Ethereum and Bitcoin is the fact that Ethereum, Ether, which is the token that's on Ethereum, Ether, and not to be confused with Nas, but Ether is the oil, is the gas that allows you to transact and do things on Ethereum. You can't do anything on the blockchain without having that token, which is Ether. So in a nutshell, all roads at some point are going to lead to Ethereum because all the institutions are connected to Ethereum. You got the Ethereum Enterprise Alliance, which has some of the biggest companies you could think of a part of it. All these institutions, as far as finance, like BlackRock, Fidelity, and all that, are going to be tapped into Ethereum. All these RWA, AI, all these different categories and niches that exist in other ecosystems also exist on Ethereum and was probably started on Ethereum. So Ethereum has first mover advantage. So this is not financial advice. I ain't telling you to now take your bread and throw it into Ethereum, but pay attention to what Ethereum is going to do, because Ethereum is the granddaddy of this crypto space. And that's all I got for my Crypto Rants today. It's your boy Dre La Soul here with another banger. Make sure you like, subscribe, share, tell a friend to tell a friend that the world is changing. and it's changing right in front of our eyes. But let's not. It's changing right in front of our eyes. But let's not get left out. Let's not get left behind. There's too many times, for too many years, for too many decades, people like you and I was left out. So now that we at the round table, let's take advantage and make our mark. You heard? Tap in.